Good morning. This is Larry McMillan with a stock market update on Monday, May 17th before the market opens. So last week we saw selling early in the week that set off a number of new sell signals, and then we saw heavy buying late in the week, which canceled out some of those sell signals, stopped them out, and gave us a couple of new buy signals. So let me just quickly go over what's the final result. The S&P chart still has a bit of a negative tilt to it after all that was done. It rallied strongly on Friday and almost closed the gap at 41.88. If it closes that gap, then that's another more positive development. And of course, if it moves to new highs, which are not that far from here at 42.38, then that would eliminate any bearish arguments as far as the SPX chart goes. But right now, it's still a little bit in doubt. The equity-only put-call ratios remain on sell signals. Call buying was heavy, but not heavy enough to turn the ratios over to buy signals, so they remain bearish. Most of the other indicators, though, have turned more bullish. Breadth improved a lot on Friday. In fact, in terms of stocks only data, it was a 90% up day, so that's very powerful, although often just a short-term thing. But both breadth oscillators are on buy signals right now. Meanwhile, new highs versus new lows has been jockeying back and forth all week. On Friday, there were more new 52-week highs than new lows. And if that persists again today, then that indicator would turn positive again as well. I guess the big bullish indicator is the new VIX spike peak buy signal that came in on, I believe it was Wednesday night. Or perhaps it was Thursday. But that has a great track record. And so we have taken positions in line with that. So that and the other facets of volatility, which are the term structures remaining positive, and the VIX futures did not invert, so June futures have stayed at a higher price than May futures. That's all positive stuff. And basically, now we have the May futures expiring tomorrow's their last trading day and expire on Wednesday. So the June futures will become front month, and then we'll be looking at the relationship between June and July. But that's fairly widespread too right now, with July trading at a higher price than June. So those are all bullish things, and we're left with a bit of a mixed market. So if VIX can remain low and SPX can regain new high ground, then clearly that's all the bulls would need. But if we get a little bit more indecisive move from, say, especially from SPX, if it can't really close that gap, then there could be more to go in this correction. As we were telling subscribers in the middle of last week, the break down through 41.20 was negative, but not a game changer. So SPX would have to fall through support at 4,000, say, or even really 38.70 before you had a bear market on your hands. So right now, SPX is a little bit negative. Some of the other indicators are more positive, and we'll probably get a resolution to this matter as soon as this week. So I invite you to visit our website, subscribe to our newsletters where we keep you up to date on these things daily. And thanks for listening. Have a great week trading.